Hello, welcome again to Fairtax Power Radio. I'm Bob Paxton.
And I'm Bob Scarborough.
And we are the FAIRtax Guys. I brought my Mega Minx out again. The one
that's a nice one. It's like a banner plane.
Yes, this is the one I'm going to bring to North Carolina with me and sit there in the studio and show you how it works.
That's great. Yes, so, if you can guess how many minutes it's going to take Bob P to get this Rubik's Cube figured out, you'll win
5.5
OB t-shirt.
This is a 5.5 minute solve, no problem. But let's plug real quickly that time's coming up on us when we will have our annual live Fairtax Power Radio show there on WTOB.
Not too much longer.
I'll be coming up from Florida. Jade will be actually flying in from Colorado.
Right.
We're going to be doing the Fairtax Power Radio. Of course, we'll set up the video camera so those that are watching on the video podcast or maybe listening on other radio stations, they can see all this as well. But we will be live on WTOB first Sunday in October. I think that's the 2nd.
It is.
I'm not mistaken. So,
it is right in the middle of the Carolina Classic Fair, which is.
I will go to the fair and eat all their candy apples. I will ride the Ferris wheel, but nothing else. And
no turkey leg.
Turkey leg. Well, maybe you may be able to convince me to work on that, but that's coming up fairly soon here. So looking forward to the trip.
Looking forward to it.
Okay, we got to get right on into things here on Fairtax Power Radio. If you didn't catch last week's episode, go back and check it out on the YouTube channel or go to fairtaxguys.com, and there's a link there that'll take you back to it. Steve Hayes shared some pretty good insight on the future of the fair tax movement now that the 87,000 new agents is no longer just a proposal. That is the law. It's going to happen, and we'll just see what happens from here.
Yeah, I'm excited about all of those people working on my behalf to make sure that everybody else is getting audited, because I don't think I'll be audited. But now that I've said it, I probably will be.
Yeah,
I'm probably out there writing down my name. Make sure you have it spelled right. It's SCAR. Okay.
Real quickly, I found something online a while back, and of course, you got to kind of preface this with not everything you read about online is 100% accurate. But I found where someone said there's some other things buried in that Inflation Reduction Act. $6.5 billion natural gas tax, which will increase household energy bills, $12 billion crude oil tax, which will increase household costs, $1.2 billion coal tax, which will increase household energy bills, corporate income tax hike on U.S. businesses passed on to households, of course, $124 billion stock tax, which will hit your nest egg. I'm not sure about this one. 95% federal excise tax on American pharmaceutical manufacturers, $52 billion income tax hike on mid-sized and family businesses, and of course, supersizing the IRS. All of that is in that Inflation Reduction Act. So I think that getting back to what Steve was talking about last week, they have given the Fairtax Guys and the Fairtax movement a lot of ammunition with that law.
Yeah. And we need help, and this might be a good time to enlist our own army, the Fairtax Army. Since there's an IRS army getting ready to go jump out there, we would encourage our viewers and our listeners to consider helping us out here at Fairtax Power Radio in your neck of the woods, getting your candidates ready for the fall midterms. By signing the FairtaX Pledge. It's real easy. You can go to fairtax.org, get the pledge, print out a bunch of them, go and see your candidate on both sides, both candidates, and say, do you support this? I support the FairtaX. Would you be supportive of the FairtaX if you were elected? And
it's under the Get Involved tab on the main page of FairtaX Dog. Open up the Get Involved tab, and about the 4th or 5th one down is the candidate pledge page, where you can download a hard copy of the pledge to take to your candidates, and you can also see who has signed it.
That's right. And there are plenty of people that have signed up, and a lot more too. And I do want to say that we have one Senate candidate, Mo Brooks, who signed over a year ago now.
From the state of Alabama. He didn't get past the primary.
Yeah.
But let me mention this. We do have two more candidates who are not listed on that page, at least not as of the time I looked at it earlier today. There's and these both of these candidates have won the primary and will be on the general election ballot in November. There's a gentleman in Michigan named Stephen Elliott who will be going up against Rashida Tlaib, a rather well-known candidate there. And there's a lady in New York, Tina Forte, who will be going up against AOC, Alexandria Ocasio-Cortez. So Elliott and Forte both have signed the FAIRtax candidate pledge. They'll be going up against some pretty high-powered opposition. But we wanted to mention those and acknowledge those. I have reached out to both of those folks. The only contact information I have is their campaign website, which is sometimes not the best way to get a hold of somebody. But hopefully we will interview at least one, if not both of those candidates here on FAIRtax Power Radio before the midterm elections happen.
That'll be great. Yeah. And again, fairtax.org. When you go there, click on Get Involved. FAIRtax candidate pledge is in the middle there. And print those out and make a point to go see your candidates in your area running for the House of Representatives. If your Senate races this year too, you want to make sure that you get in touch with the folks that you might be voting for and let them know about the tax on consumption known as the FAIRtax. This is the one thing that can put a halt to all the madness that's taking place with the Internal Revenue Service right now, as far as all that's going on. I mean, the media frenzy over what is taking place. Some people are saying, "Oh, it's nothing. Everybody over 400,000, people under 400,000 a year aren't going to get audited." I think it's that they're not going to. Their chance of getting audited is not going to increase. So, as the sliding scale of percentages always works, it's very possible that you might be in the crosshairs at some point.
When you think about it, when you're thinking about who to vote for, candidates have to be, by definition, one of these two positions. You either favor getting rid of the IRS and adopting the FAIRtax, or you're perfectly fine with all of these 87,000 new agents coming after people. And so if your candidate has not pledged to support the FAIRtax, then by default, they are in favor of what we've been talking about here on FAIRtax Power Radio for the past 3 weeks for sure. And all the nasty stuff that's in that Inflation Reduction Bill, they're for it. If they're not for the FAIRtax, they're for the current system, and we know what the current system is. So that's just the long and short of it.
It's a tangled mess up there, and if we the people want to retain a little bit of control, if not a lot of control, over what goes on in Washington, D.C., the tax on consumption through the FAIRtax, getting rid of the Internal Revenue Service, canning the 16th Amendment, rescinding the 16th Amendment, we're probably as close to an explosive analysis and debate about the FAIRtax, currently H.R. 25 in the House of Representatives, not out of a committee. We're as close as we've ever been to seeing a substantive debate in the halls of Congress for the FAIRtax.
Yeah, I mean, you're one of two positions. You're for the IRS or you're for the FAIRtax. It's one of the two. And people say, well, I like a flat tax. Well, that is still an income tax, and that puts you on the side of wanting to keep the IRS. So we need as big a FAIRtax army as we could raise here at FAIRtax Power Radio. So share these videos, tell your family and friends and your in-laws and outlaws, and even tell your enemies if you want to.
But, tell everyone
that we need your help getting rid of the Internal Revenue Service before some of the horror stories that we know are coming actually begin to unfold. But
agreed. I agree. Midterms elections are important. This is the point of time here in the next several months where the candidates are listening to the voter.
All right. Well, it's that time again.
Yes, indeed, do. That's right.
Got a few little goodies here I want to tell you about that they have found on congress.gov. This is what we do. You go to congress.gov, put the words Internal Revenue Code in quotes in the search bar at the top. Make sure you're only selecting legislation in the current Congress over there on the filters on the left. And if you hit the go button on that search, as of the day we're recording this, August 26th, 1,885 hits, including HR 8741. And this one raises a red flag every time. Every time you see the word fairness in the title of a of a bill in front of Congress,
It ain't.
know that that's probably not what's going to happen. This is the Firearm Industry Fairness Act from Representative Carolyn Maloney in New York. And this one actually does have some text in it, and you open it up, and it says this Firearm Fairness Act is to amend the Internal Revenue Code to impose a tax on the total revenue of manufacturers and importers of semi-automatic assault weapons.
No, really?
And of course, it goes on down there, and you dig into it, and it says there is hereby imposed, in addition to any other tax imposed by this title for each taxable year, a tax equal to 20% of the total revenue of each automatic, semi-automatic assault weapons manufacturer or importer. Now, there's your Pandora's box for you. Try figuring that one out.
I want to know who writes this stuff. That's what I want, that job.
I don't know who wrote the bill, but
the proposal that you just read, that was remarkably well articulated to the point of confusion for me anyway.
So Carolyn Maloney, New York District 12, is the sponsor of that bill.
My goodness.
As of today, as we're looking at it, it has a grand total of 0 co-sponsors on it, but that's it. Firearm Fairness Act is that they want to impose 20% on, again, this is how you use the tax code to achieve political objectives. You know, one side of the political aisle is just apoplectic about assault weapons, and they are doing their full frontal assault against these assault weapons, and they're trying to use the tax code to do it. Here's another one, the HR 8737, the End Subsidies for Fossil Fuel Advertising Act. Another thing that same side of the political aisle is just all up in arms about fossil fuels. And you get into the text of this one, and it's to amend the Internal Revenue Code to deny deductions for marketing related, let me do this again. To deny deductions for marketing related to the extraction, distribution, or consumption of fossil fuel. I think we've seen something like this before. They basically want to make the advertising budgets of these fossil fuel companies is no longer deductible as a business expense, is what they're trying to do with it. And so there we go, using the tax code for political purposes again.
Fossil Fuel Advertising Act, is that what you said?
Yeah, it's the End Subsidies for Fossil Fuel Advertising. You know, if you're a big oil company and you advertise on TV, like most of them do, or the radio as well, that is a business expense. You know, your advertising is a business expense. You have to do that to run your business, and you can deduct that. Now, if this bill becomes law, they say, all right, well, your advertising expenses are no longer going to be, you know, deductible as business expenses if you are in the business of promoting, extracting, distributing, or consuming fossil fuels.
Consuming. That means I can't run an advertisement because I'm consuming fossil fuels. I mean, not me, my car is.
Well, you'll have to ask Katie Porter of California 45 about that one. That's her bill. So that's crazy.
Do they like draw straws there in Washington to see who's going to bring the most ridiculous bill to Congress?
I don't know. Do you think we ought to consider that one for the Hall of Shame?
Yeah. Okay. Well, it's not as high up as some of the others, but let's throw it in there, man. We'll take a look at it.
Okay. Well, here's one another one where the title just really caught my eye. HR 8717, the You Earned It, You Keep It Act. And it says, that's the FAIRtax. And you open it up here and it says, no, that's not the FAIRtax. This is a bill to amend the Internal Revenue Code to repeal the inclusion in gross income of Social Security benefits and for other purposes. I think we've seen something like this similarly before, that they want to fix it so that Social Security is no longer considered taxable income, even though this particular bill, the You Earned It, You Keep It Act, was only introduced like 10 days ago.
Oh, wow.
So that's it. That's Angie Craig of Minnesota District 2.
Oh,
so there we go. That's some of the crazy things that we're going to do with the Congress.gov. So I will say that's all we'll do on that for this week, because I know we want to get into some other things that you dug up this past week. Again, talking about, you came up with an article that sounds like people may be needing. 10 things that are likely to trigger the IRS to audit your return. And now that they're going to have 87,000 new agents to do so, your chances of getting audited just went up. So you better pay attention here.
Right. Dot your I's and cross your T's. And so this is on techinkers.com, techinkers.com. And 10 reasons the IRS might audit your taxes.
Pay attention.
Starting at number 1, outsized charitable contributions. The IRS provides typical charity donations by income level. If you take a significant deduction, the IRS may contact you. Hi, we're calling from the Internal Revenue Service. Can you imagine?
Remember too that for most the lower and middle class taxpayers, they take the standard deduction. So right. you don't even take a deduction for charitable contribution unless it adds up to quite a bit, because your itemized deductions have to add up to more than the standard deduction before it becomes mathematically feasible for you to use them.
Right. And so I'm not going to necessarily be at that level because I just don't have, there's not that much that I can scrape together to reach that. Number 2, you want to read number 2?
I don't have the article in front of me real quick. Let me see if I can find it. You go ahead with it.
Yes. Number 2, making math errors. Don't write 3 instead of 8. Right. I don't write anything when it comes to the filling out of my tax forms. Don't write 3 instead of 8. Don't forget the last 0. If you're doing your own taxes, triple check your numbers. Make sure that everything adds up. I would think that if you were using a computerized software program, or, you would end up with, everything balancing out that way. I would think. Making math errors. That's number 2.
Yeah, I have it up here now. Let's see.
Number 3.
Number 3 is, nobody would ever do this.
No.
Failing to report some income. How about that? Like the PA announcing work I do for the college down here.
You get your 1099, right?
I get a 1099, and I suddenly decide, well, I'm just not going to put that on there. They will eventually get that, since whoever gives you your 1099 also sends a copy to the IRS. You're not going to get away with that for long.
No, they'll be knocking on your door or calling. Hey, we're from the Internal Revenue Service and we're here to help you. Find that 1099.
Oh, mercy.
The publisher sends that. I mean, whoever did you did the work for. And it may take years, because didn't we report just a few weeks ago that the Internal Revenue Service is way behind on completing a return?
Oh, they're way behind on that. Of course, part of their grand plan with all of this new money they're going to get is they want to update their computer systems. And we have heard that there's a plan in the works that, since the IRS knows so much about you anyway, they're just going to go ahead and pre-fill out your tax return for you and send it to you for your signature, your approval. The problem is that really doesn't save you anything, because you've got to go through the whole process to find out what your figures say versus what their figures say. And how many of you are going to have the brass to stand up to the IRS and say, I think your computer's wrong? And they'll say, all right, prove it.
Well, but see, each time you respond to them, it's going to be 6 months before they respond to you, maybe. Or they might keep you on the top of the pile until they get you taken care of. I would think that would probably be it. Okay, number 4, we're actually on a page that has 10 reasons the IRS might audit your taxes. We figured this would be an opportune moment to go over this as we go along. Please follow along if you want to.
Since your chances of getting audited have just gone up dramatically, you better listen.
Number 4, claiming too many charitable deductions. You can deduct.
Again, you have to do that above the standard deduction before it does any good.
So and you have to really, it had to be a lot, because what is it? Is it still 24,000 threshold now? Has it gone down?
I think so. It's been a while. I'm one of these people like everybody else. You ask me anything about your taxes and you really don't remember it, because I have no idea how much tax I paid.
Come back and see me next week. It'll be a different answer. It's like calling the Internal Revenue Service. Claiming too many charitable deductions. Number 4, Number 5. You want to do number 5, Bob?
Number 5. Well, this is similar. Reporting too many losses on a Schedule C. Now, this is self-employed people. They may claim, that they've had too many losses on there. You can deduct your losses, can offset your gains. But if you report too many losses, that raises a red flag at the IRS, and they can, now that they're going to have the manpower to come get you, they will.
And invite suspicion.
Yes.
You
ought to remember Terry Stafford's Suspicion. There was a song.
That's right. The song from the 60s. Sure.
Uh-huh.
All right. Here's another one that, of course, it has to do with the threshold. These all seem to be in a similar mode of, they don't talk about publication too much. Publication 17. Number 6, too many deductions. Taking deductions for an excessive amount of company expenses can raise suspicion. You do a lot of business lunches, I see. Of course, that's going to increase the likelihood of an audit as well. And that's why I don't eat lunch, even if I'm conducting business to somebody. That's it.
You don't take clients to Mr. Barbecue? Come on.
Well, no, we meet down there and they pay for theirs and I pay for mine. And
well, we got to take Jade down there.
Everybody. We're talking about a barbecue restaurant in Winston-Salem, North Carolina. Mr. Barbecue.
Sorry, didn't mean to get you off in the weeds there, but
but it's wonderful, and the fried chicken is delicious. So just if you're ever in Winston, or you can call me, and I'll put a box of dry ice together and send some down there to wherever you might happen to be. We'll start a nationwide trend there. All right, and we got to number 6 and number 7. If you would go ahead.
Number 7 is just the simple fact of claiming a home office deduction. They say that home office fraud abounds out there. And, it's kind of tempting to claim non-deductible expenses as related to a home office. And, of course, the IRS, it says, limits the home office deduction to part-time workers.
What if you have a home business? What if it was before the pandemic and you were just, starting a little side gig or something? That's not part-time necessarily. I guess you could call it part-time.
Well, that's it. This article says that that's limited to part-time workers. So whatever, if a lot of more people, again, with the pandemic, they said a lot of people have started working from home, and businesses are finding you don't really have to be here. You can work from home. And it would work in a larger percentage of the cases than you might normally think that works. They may need to rethink that one.
Well, some larger businesses are now figuring out that a certain amount of work at the home for the business, there's an hour or so of lost productivity within a workday, just based on the I'm at home as opposed to I'm working, where Mr. Slagheap down at the corner office will be able to walk by and see if I'm doing something or not. And post-pandemic, it's now, people are now working back in. I talked to a friend of mine today who said, well, I can go in 3 days a week. I go in 3 and I'm home 2, but I could go in 5 days if I wanted to. But the reason I'm not coming into the building downtown is because of the traffic and because they're paving the roadway and all these other things. And so, that whole home and again, the fair tax will eliminate all the need for scratching your head over, are you in the right lane for doing things? Publication 17 is one of our go-to documents to underscore the sheer lunacy of filling out your taxes every year. So you might want to consider that as a alternative to reading your favorite book one evening.
We got about 4 minutes here to get through these last 3 points.
Okay.
So this next one is likely to get me. So
go ahead.
Using nice, neat, round numbers. When doing your math, be exact and don't guess. Don't round to the nearest 100. Round to the nearest dollar. Again, well, of course, I use the online tax preparation software, so hopefully that they don't mess me up on that one. But that's what they say.
A lot of those online tax preparations, you pay a few extra dollars and they'll go to the audit with you. How that's going to change here in the next year. Maybe they'll go up on their price, or maybe they won't offer the service anymore.
My guess is they'll go up on their price. Now this one will number 9 will never ever get me. No way.
No, I gamble on Highway 52 twice a day, but that's a driving situation. You can deduct losses on gambling up to the amount of your winnings on Schedule A. But the Internal Revenue Service knows that many taxpayers don't keep the records that they need to.
Can you imagine if you're sitting in a slot machine in Las Vegas and you're putting quarter after quarter after quarter or whatever into the thing? You're sitting there keeping track of each one. Publication 17 would say you should do that.
That's right. That's right. And like you, I would never, I mean, I look at that type of activity. I mean, it's casual for a lot of people. Some people are really into it. That's a story for another day for some people, I'm sure. But
yeah,
you want to make sure that Schedule A, I think that's the underlying thing that you've got to be careful of. And Schedule A is something that you need to have you need to bring some receipts with that.
I don't know. Does Vegas give you receipts? I've been there once and I never did. I walked through the casino. I didn't stop to play, but I had to walk through it to get to where I was going. And
okay.
Of course, it was funny. The preacher called right as the moment I was doing that. He says, "How are things going?" And says, "Well, I'm in a casino in Las Vegas." And he says, "What?"
Right. Well, that's good.
That's totally unrelated to what we were talking about, but that was a good story.
We'll see you to get 10% of your winnings when you return next Sunday.
Okay. Well, I did not play. I was just walking through on the way to the front door to get in the taxi to go back to the airport. Last one, number 10, bad debt losses. That means if you don't pay me back that $100 I loaned you, I'm going to write it off.
Right. Again, usually a complicated subject. Many taxpayers lose because they can't show that they had a real debt or that they lost money an earlier or later year than the tax year that they're working on.
Yeah, you make somebody a loan, you do it on a handshake, you don't have any documentation, you don't get paid back, and somebody's, oh, okay, I'll deduct that. The IRS will take my word for that.
I have friends here on Trade Street that I, contribute meals to sometimes a couple of bucks. But I don't keep up with and I don't consider it a loan necessarily. So that's not something that I would think to put as a loss, of income or a loss of finances. Not a bad debt necessarily, but I mean, you have to be careful what you write on there. And more people, and I'd be interested to go to one of the online tax preparation websites to see indeed how much their services are going to go up because of the now the perceived greater scrutiny of the tax returns that are coming in, and even the ones that are still floating through the system from years past.
Millions of ones that haven't processed yet. But I say we're just out of time again. This is just too much fun, and time goes too faster to having too much fun. But there we go. There's 10 things that might get you in trouble with all these new IRS agents. Again, we'll ask you to please join the FAIRtax Army and help us get rid of this entire mess. FAIRtax.org. You can write us at the FAIRtaxGuys@gmail.com. You can respond to our Facebook page. You can leave us comments on our YouTube channel. Lots of ways to get used and lots of ways. And go to FAIRtax.org, click open that Get Involved section and go for it.
Yep. FAIRtax Pledge. There's all kinds of a state leaders list. You can find out who to contact in your area, sign the petition, and be in touch with us here at FAIRtax Power Radio, because we would love to have you get in touch with us to ask us, hey, and we'll ask you, how can we help you in your area reach out to not only your fellow citizens, but also to the officials, the candidates that are running for office here in the midterms.
Yeah, let's get as many candidates as we can on the FAIRtax candidate pledge, because again, there's only two positions. You're for the fair tax and getting rid of the IRS, or you're for the income tax and all the stuff that is coming with it. And that's going to wrap up this edition of FAIRtax Power Radio. We're flat out of time again. I'm Bob Paxton.
And I'm Bob Scarborough.
The FAIRtax Guys reminding you again, the fair tax is the only truly fair tax, and once you understand it,
you will demand it.
The fair tax does not hurt the poor, and does not reward the rich because it's not a straight sales tax like the sales tax we already have. The FAIRtax creates a level playing field by taxing everyone at the same rate at the cash register, but untaxes the household up to poverty level. This means that those living closer to the poverty level pay a lower overall tax rate, while those living a lavish lifestyle pay a higher overall tax rate. Yet the law still applies to everyone equally. This is called the prebate, which reimburses every legal American household the taxes they will have to pay on the basic necessities each month. As those basic necessities vary by household, the FAIRtax untaxes you and not the purchases. This keeps tax lobbyists out of the picture and keeps you in control of what you pay. Do you think the prebate will be too expensive and act just like a huge welfare program? The prebate will cost less than half of what the current deductions and exemptions cost, and operates just like the standard deduction you already take. It's your money. You're just getting it back each month rather than once a year. Everyone under the FAIRtax controls their own tax rate by deciding when and how much money they spend above poverty level, and thus how much they pay in taxes. To learn more, please visit fairtax.org and be sure to like us on social media to help educate your friends and spread the word.